biggest difference is the value of the instruments you're trading. So if we just take everything else out that we know how to trade, we know a pip, a contract, a lot size. The terminology is a little different in futures, and
Hmm.
value is a little different in futures. And of course, prop firm rules are a little different than your personal account. But if you're subtracting all of that, there's not a, and then this is probably really making it, dumbing it down quite a bit, but there's not a whole bunch different. It's a lot more stable price action, less manipulation, because these are regulated. So this number has to be the same or very, very, very accurate compared to any other place you're trading it on.
Hmm.
So there's not a lot more that you need to know, in my opinion. I think you need to understand the value, okay, that you're and the rules in which you're trading them if you're using a prop firm. The rest,
Hmm.
you can take your previous knowledge and come in. But as for the indicator, the first part of your question, I think you had three parts, a couple parts to that. You asked about what I do before class, and I'm assuming you mean the pre-market and post.
Yes. Yes. Hmm.
So
I'm.
ready, pre-market and so if I take everything off my chart, I'm actually going to go to a different instrument real quick. Let's go to MNQ. Here we go. We're on MNQ. There's nothing on it. All my indicators are off. You have endless amounts of options of how you want to see what you see on the chart. And I know I'm being very open here, but I think it's important because everyone wants to go buy a course or build or purchase or learn somebody else's strategy. And I think there's value in that, don't get me wrong. But at the end of the day, it's going to be what your eyes see best. So now that I've said that, you can decide to use like a little while back, and we can get them posted in the group, the areas of interest video where we talk about, finding the areas of interest. We can use trend lines. We can use quarter points or Fibonacci, pivot points, all of those things. You can use ICT concepts or SMT concepts, meaning midnight opens and support and resistance and order blocks, all of those things. Every one of those things, they're all, to me, more of the same. They obviously have slightly different values or meanings or application, but for the most part, all they are levels on the chart where we're looking for a reaction. Okay. Now, I said all that now to say marking up pre-market high. So pre-market is important because of this. Ready? At the bottom of your trading view screen, okay, you can go to regular trading hours or electronic trading hours. Regular trading hours are when the big market is trading. So mind you, it looks very different, right? Because this is from 9:30. Well, let's pick a different day. From 9:30, also from 4, that makes it 9:30 all the way up till 4:30. Okay? 9:30 to 4:30 equals regular trading hours. Everything that happens in between is treated a little differently, if that makes any sense to you. So remember 9:30 till 4. This is where the big money is sitting, supposedly, right? Everything that happens in between that area is treated differently. So this big gap that we have down here, this other gap we have right here, this is where the big money wasn't participating. And this is where Wall Street was not participating. Now, if I go back to now electronic trading hours, this blue mark that we have because of this indicator right here, this is all overnight action, okay, depending on how you want to label that. So again, SMT concepts, they're going to label that, overnight, Asian, London, et cetera. But this is New York, this is the rest of the time. This is New York, this is the rest of the time, and over again. New York had some great moves this day. Overnight, didn't move, okay? New York, overnight. So knowing where those overnight levels are helps us see things. So you'll notice right now we've got a naked chart. We've got candles, kind of the session marked out a little bit, and we have this little dotted perforated line here, which is Friday's, well, not Friday's, but yesterday's closing price. You can find that on your trading view. If I go to settings, scales and lines, previous day close, I have it here, right? You can do pre and post market as well. I don't have that turned on, I don't think. Highs and lows, you've got a couple of options, but that's what this is right here. So this level is telling us when the big money closed yesterday, this is the price they agreed on. And mind you, we had Nvidia, we had earnings and stuff that came in late. So when everybody's done trading, hence the big move, right? On NQ, okay? So this is where money was at when the market closed, when everybody went home for the day. And when they came back the next day, notice how by the time they came back, we're almost at the same price. Now, that's not going to happen all the time. As we just demonstrated, there's some gaps. There's some missing pieces. But this is a very magnetic level, right? So knowing that pre and post market, pre-market highs and lows, kind of important. Pre-market high and low is where supposedly the bigger money is coming in or setting up their positions, okay? Where there's profit taking from the overnight things and London things, and or people are setting up their positions on the day. So we like that pre-market high and pre-market low, and we like to know what happened yesterday. So if again, I'm gonna take out all the overnight action and just mark up as if yesterday was the last day we saw, here's what that looks like, okay? So I'm gonna go to my little raise. I use raise, you can use boxes, you can use whatever you want. Ooh, Nelly. Hide indicators, got it. So I usually make my pre-market high, I make that a blue line, and I kind of make it a little skinnier, preferably. So that's yesterday's high, okay? And I'm gonna make another line and go, this is yesterday's low, okay? So that means from the highest point that the open market saw yesterday is here, the lowest point was, technically it's here. I'm gonna make that red. So if we're breaking above where we closed yesterday, well, our highest point yesterday, and we're staying above, I'm looking for buys on the day. If we're breaking below and staying below where we closed on the day yesterday, I'm looking for sells. And the same thing, if we start to move back up and I'm looking for reaction zones, because what did we said? We said, number one, you have to decide which parts of these your eyes see best. Number two, we said every one of these words that people try to make to be the end all be all, they all are kind of doing the same thing, just using a slightly different methodology. And the thing that they're all trying to do is they're looking for a reaction at that level. So I don't care if we're talking about fair value gaps, inverted or not. I don't care if we're talking about pivot points, Fibonacci, quarter points, support, resistance, supply, demand, pre-market highs, midnight opens. It doesn't matter what word we put in front. All we're doing is finding the levels that, whatever level we're looking for, and looking for a reaction at that level. So again, going back to yesterday's high and yesterday's low, I can use that information a whole host of ways. If price is here when we're opening, I know we're going to be targeting yesterday's high and or the close of yesterday, right? So I'm using those as targets. If we're breaking and closing below on the smaller time frame, I'd look for the retest. But if we're breaking and closing below and retesting, I'm looking for price to continue in this direction, right? We're looking for reaction. That reaction equals a target to it, right? They all act as little magnets, or a bounce off of it. We act as a rejection, right? Counter move, or a breakthrough and a retest confirms. Because if on the day we're staying above yesterday's high, it tells us we're bullish. If on the day we're staying below yesterday's low, it tells us we're bearish, right? I know I'm just kind of hammering it all out, but we can kind of clip this part and hopefully make it into a little video for you. But that's it. That's yesterday's high, yesterday's low. The same goes for pre-market high, pre-market low. So remember, this is where there's a lot of profit taking. There's a lot of positions being set up in this time frame. So we're going to mark up the high. This is where London is closing, and we're going to mark up the low. So this is the low, red. When market opens, in this case, we were sitting very close to the pre-market low. If we're breaking below that by itself with no other indicators or JGS or breakout is telling me, cool, I'm looking for the next area of interest on my chart. That area of interest can be anything. It's whatever you're using most. It can be your fair value gaps. It can be your order blocks. It can be your supply demand, yesterday's highs and lows, midnight opens, Asian lows, London highs. Like, people use all kinds of different things. I know I'm just really giving it all to you, but I want you to find the ones that your eyes see best and then stick with that. Because at the end of the day, that's what this is all about, is finding a way for your eyes to see this best and for you to make this profitable long term.